All right, Doc here from North America. Happy to hump day. Another fun-filled day. It's the middle of the week. So here we go. Let's see, what do we have up there? That's a dollar index. You can see the dollar index is kind of lifting this morning. Let's take a look at Swiss. I'm sure Swiss will be acting the same way. See? That's what we watched for the last couple of days. It's been trying to do that little push up here. And let's see, we were looking at the gold just a little while ago. You can see gold has come back very nice since yesterday morning when we were doing the webinar. And let's put the Swiss over there too. Where's it at? Right there. You can see the strength there also. Let's check the chat line. Let's go over to there and see if anybody is heya. We got news coming out, so that could be entertaining in its own right. Was it CPI or something like that? You know, they don't really reflect a lot of the prices that are in the marketplace at the moment, like lumber prices and food prices are not included in that. So it's going to be interesting to see how that plays out at the same time. I think I'm going to take a look at the Dukascopy calendar to see what they say. Just want to get a flavor of what the numbers look like. And then, okay, so there you go. There's Wednesday. Okay, so we're looking at, it's CPI. Someone was talking about that yesterday, fundamentals again, about like, can't find Giannis's thing on. I have to communicate with him again about that. Fundamentals. He needs to update that. That is such an important thing. Since 2008, quantitative easing has removed a lot of the fundamentals from trading in many ways. So that's, maybe him and I could do a collaborative thing or something. But anyway, yep, there's a CPI. Let's see what the numbers look like. Let's see, did they come out? Let's just double check. I'll see, we can see what the market shows, the stock market, because that's where any noise will develop from it. Oh, so they're knocking the stock market down harder. Okay, or maybe not. Looks like it's come up from some lows there. That's what it is. Okay, so you can see like the S&Ps are down 35. They went down to 95. So the news must have shook them up a little bit there. Let's see if we can do this. So there it is right there. And the news came out right here. So they drove the market down 5 minutes beforehand. And that is where the numbers came out right. Where did they come out? They came out right. Oh, wait a second. Okay, so that's what it was right there. The numbers came out right there. And so it drove them down hard over a 52 second, and all those bars are 52 seconds total. And then from there, the same distance is like 3 minutes there. And now they're doing a little bounce up. That's probably the Federal Reserve just stepping up, and they don't like the idea the market's getting beat up. They want it to be slow and steady, and since they don't have to deal with the volatility gang anymore. Remember, that was what drove the markets crazy back in February, March of last year. All that COVID stuff that came out, a combination of the volatility funds. If it wasn't for the volatility funds, we wouldn't have seen those 1,000-point days in the Dow Jones Industrial Average. And pretty much they're all out of business now. So there's nothing left of them. So without those volatility funds, there's no real nasty volatility like that anymore. So the Fed can step up and keep this a little bit much more firmer. They can let it drift a little bit. They can do all kinds of wonderful things here. It's not the biggest challenge in the world. Now let's see what the numbers look like. I think we could actually, at one point I had that box up there that we could kick it up on the screen. Let me see what it says here. Just for the fun of it. Let's see, CPI month over month, year over year, I guess, which, let's see what the year over year was. So the year over year, it's not really showing the numbers there, so let's try something else. Let's just go another way. Alright. And so that's pretty much the action of it all right now. That's why we're seeing this action here. Let's take a look at, I guess if the consumer price is going up, I'm assuming, just a wild guess, but I mean, the markets are not exactly acting the way they're supposed to fundamentally anymore. So, uh, inflation, so the dollar's going up because of inflation. I guess that's what it is. You would think it would go down inflation, wouldn't it? No, I guess it has to go up inflation. So, I mean, usually the interest rates have to rise. So let's take a look at the 30-year and the 10-year and see what they're doing. So there's the 30-year. It's down a little bit. So when this goes down, interest rates are rising. So there's pressure on the interest rates there. Matter of fact, there's been talk that if the 10-year goes to, where's it at? Come on, go down more. If the 10-year goes to 165, that's going to put a lot more pressure on the NASDAQ. And so that's there right now. You can see that. Let's refresh that. And we'll see where the price is quoted. Last I saw the 10-year was trading at 163 and change, almost 164. So you can see a little bit more pressure in there. I think I'm going to check that out too and see what they're showing. Let's see. I have another place I can go for that. And let's see what they're doing with that. There we are. And let's see how they're quoting them. Like I said, I saw the 10-year at 163 and change. Not 164 yet, but close. And right now they're closed. Okay, yeah, so it's 164 and change now. Okay, so it's probably went up, smacked up against the 165. I'm seeing it at 1647. So 1.647. And last night it was in the 162s. So yeah, that inflation thing is obviously got some people paying attention to it. Again, the Federal Reserve is going to do what they're going to do. They're really, it's an interesting thing is that the marketplace is actually asking the Fed. What I mean by the marketplace, these money managers are actually asking the Fed to do something like change your language to say that you're concerned about inflation. Somehow or another, they've given the attitude that inflation means nothing. And I guess when you see the federal government start to want to spend $4, $5, $6 trillion that they don't have, that probably does make a lot of people nervous. And since we don't have a media in the United States anymore, it kind of really messes that up. You don't have conflicting opinions. You only have one opinion, and pretty much everybody sees it. I was talking with Wynn this morning from Dukascopy, and he just repeats CNN. That's all he does is repeat CNN over and over. And I don't even watch CNN, but I can see and hear from the noise from it all the time. From a distance. So, okay, and so that is one of the problems. It's kind of like a blind side we're having here in the States. The idea that there's not dissenting opinions besides one network, and they're pretty much almost blocked as it is, or a couple of networks, Newsmax and Fox Business, not Fox News. Fox News is owned by Disney now, so they chime in pretty much the same way ABC, NBC, CBS, CNN, MSNBC, New York Times, they all chime the same stuff. They don't. There's no difference. You could buy one, you get them all. They're all the same, just different person saying it. So, but I'm hearing money managers get on the shows that I watch, and I read, and they're actually asking the Fed to make it clear that they understand that the inflation could kick out. Now, normally currency traders would see this much clearer, and I guess that's why we're seeing. Let's just go over to the euro now. But as we are seeing the euro, back off here this morning. Let's see, where is it at? Right, not there, right there. And there is the euro. We see it flirting. See, it's underneath the zero line right here. We're seeing some pressure, and we actually see the white line coming down a little bit on the weekly. I really have my doubts that they're going to crush it, but maybe were they looking for lower inflation? I don't know how they could look for lower inflation. We're paying $15 or $16 a board foot for lumber around here. Gas prices have almost doubled since Biden got in. What else is there? I mean, it's all over the place. People are starting to say, didn't think that Joe could do such foolish things so fast. You know, people who had voted for him, they're like, yeah, okay. You know, I haven't seen Joe do anything right in 50 years, but somehow or another, a lot of people thought he actually had a brain in his head. And so they're really kind of shaking their head at the moment. And you can see here the euro. I'd be surprised to see the euro go into a weekly sell this week. You know, I just kind of think it's going to carry them around this dotted area. You know, this is it's had a nice little move. You know, the funds have to adjust for inflation, and that's pretty much the name of the game. That's usually the way it works, you know. And so we're not really going to see. I just don't see anything in the numbers screaming that they're going to get nuts. You know, I don't see that. Hey, Stefan, how you doing? What's your intraday projection for the Dow Jones? Well, let's take a look at it. Let's go. Let's take it apart together. This way, you'll learn when I throw them up on the screen. You'll be able to appreciate it easier. Okay, so here's the daily. So we know this. You know, we came in a daily sell. We're flirting with the weekly sell right here. You can see that. Can you see that? Oh, you can't see that. Let's do this. There we go. And you can see right here we're flirting with the weekly sell. We came in a daily sell. So obviously, you know, the math is saying that it has downwardly pressure. Now, let's go. We can take a look at it more intraday. Let me do this. Are you looking, Stefan, at a hourly or a 4 hourly or a half hourly or 15-minute? What are you looking at? Because I follow contracts and ticks, so I do spatial, and they're so much more accurate than the minute ones. But hey, everybody, you know, it's a market. You do what you want to do, and that's the way it rolls, you know. And some people, you know, have they do those 4-hour charts, and there's a lot of insight in there. There's no doubt about that. So, Stefan, tell me what you're looking at on it. Is it 4 hour? Okay, so let's take a look at a 4-hour chart. This way, you'll be able to see what the math is saying. Let's see, where am I at here? Let's go with that. There we go. All right, now I think we're going to do it down here, and then I'm going to bring it up to you instead. So let's do this. Let's make a copy of one of these. I'm going to do it in front of you too, so I have no problem with that. So let's take this one right here. We can do that. Make a copy of it. Copy of it right there. And then paste it. And then bring it back down. And dismantle the chart and bring it up to you. Alright, there. Now, let's put a 4-hour in there. Let's see, so that'd be YM. Right there's June. And also we're going to change that into a 4-hour setting. You know what? Let me do this too. Let's do this. Just make it a 4-hour. I'm not going to get fancy for the moment. 4-hour. And let's go back and look, you know, I don't know, 18 days, something like that. See what that does. It's backfilling now. Probably need to go back even more days. Once it fills in, we'll go take a look at it. There we are. So that is a 4-hour. Let's just double check what it looks like. Yep. And let's scrunch it up. Where's that? Right there. And let's put more time in there now. You'll be able to see the success or failure of it. Oh, did I screw something up there? Oh, there it is. Okay. Now this will give us a little bit more in depth. You can see it's taking it back into April, so that's good. Maybe I should have just done it like a 20 instead. Just do it by shifts of 2 days. It'll be much more accurate. There you go. And then let's reset that too at the same time. All right, and then we widen it again. And then what I'll do is I will add a few more days, just slowly inching our way into it. There we are. So you can see here now we can widen this, and what you're seeing is obviously the volatility is kicking up. And matter of fact, why don't we do this? No, okay, you can see here we broke down. Where is it? Right here. That's last night, right? No, it's a couple days. That's on the 10th. So we went into the sell. Let's put a line in there for you. Whoa, what happened there? That's not right. Let's find it again. There it is, right behind there. Okay, so you can see right here, it went into the sell. Matter of fact, maybe, okay, let's do this. Let's put the line in there. So the line went into a sell. We'll go like that, and we're going to change it to white, and we'll add some thickness to it, like so. There we go. So it went into the sell right there from that big sell-off going, was that Sunday night? I guess that's Sunday night, right? Yeah. No, that's Monday. Okay. So that was like noon, U.S. maybe? Because there's Sunday night right there. So it topped out going into the close on Monday. And then then you can see from there, it's been in a sell since. Now you can see we're getting a little volatility signal right here, and you can see the white line pierced from the last 4 hours. It started to move back up because it was down in here, I guess. So what is that? That's at midnight, and then they rallied it. When I saw that rally this morning, from last night, I thought, I guess the Fed stepped up and tried to firm it up. And you can see there it's over the last 4 hours. Let's see, when did this start? This started at, what is that? That's at 4 this morning, right? Now we're at 8. Okay. So is this a new bar? I guess that's a new bar. Yeah, so we just started that 40 minutes ago. 47 minutes ago, and so you can see that they didn't even go after last night's low, which was curious, and you can see it's trying to show some strength. So looks like they're doing a little buying. I guess that's the best way to describe it. And we can take a look at an hourly. Why don't we do this? We'll make a copy of this. Copy window, file paste window. Let's put an hourly in there. 1 hour too, right? Yeah. And we'll go back something like 12 days. Let's see how that goes. There we go. And we'll disconnect that one too. And here it comes. So now there it is right there. There is a hourly one. And you can see pretty much the hourly went into a sell just a couple hours beforehand right there. And you can see right here, it did go back into the buy down in here, right there, for a couple hours, and then rolled over again, right there, and it has stayed in a sell all the way to there, went into a buy. No, that's no buy there because it's a red and green. See how there's a red and green, so it can't take the buy on that. Then, not there either because it's a red, and then it went into the buy right there. And after that little pop, it went into a sell and lost a little, and then made it all back like our math normally does. And then you can see here it's been in the daily buy for what is that, since 3 o'clock this morning, U.S. time, or the London Open or the Swiss Open or something like that. Yeah. These are my proprietary indicators. And we'll show you on J4X. What we do is we do this thing on J4X that has a similarity of about 68%, and see these red and green dots? It's the Hinky-Ashke bars. It kind of makes it do the same thing. So let's see what the Dow looks like on a 4 hour here, and you can use, you can put this on your machine. but mine are about 35% better than what we're showing you here on the J4X. But there's nobody out there better than mine. You know, if there are, I don't know about it. Let's see if we can find it here. I guess, like, here it is right there. Isn't it? That's the Dow 30, right? Or that's the Dow. There's the Dow 30. Yeah, so there's the Dow 30, and we're using our. Where's our work? Oh, I guess it. No, that doesn't make any sense. Where's our lines at? What happened to us there? Let's go back to the daily for a second here. What happened? I'm going to close this and start over again. Something's wrong here. So anyway, you can see here, you know, it's trying to go into the sell on an hourly at the moment, but it's at the high end of it. See it right there. You know, you can see we're underneath the line. It's probably because of that. Okay, so let's open up Dukascopy again. And it's opening it up now. So yeah, you can see the pressure on an hourly, but it's bouncing. I would imagine the Federal Reserve is going to, you know, do its best to keep things firm. I guess because they're going to change. I think they're going to change their language because too many people are asking for them to change their language, and so they're gonna, you know, they'll do something diplomatically. They'll find a way to do it. You know, they'll find a way to do it because they have to. You know, they don't want to be out of step with society. So now let's do this. We'll go. They got that. Now let's see if we can do a 4-hour again. And there we go. Okay. So you can see here, it's trying to turn up also. See that right there? It's right on the edge. It's playing with it. Oh, okay. Just moving it like that just makes it look like it's even more higher. But you can see the number right there. The yellow line, and you can take a look and see where the you can see the white line is above it, 32 versus the 22 right there on the yellow. So it is piercing. It's just that it's not scaling exactly right there at the moment. So now what this does is that this is a good tool. What we're doing is we're measuring the fast stochastic against the slow stochastic, and it's a fast K against a slow K. So we're not really watching where the stochastic is on the plot, you know, the XY plot in a two-dimensional form. What we're looking at really is just the action differential between them, or it starts me on the jokes about Einstein when I say relative. So I'm not going to go that far, but yeah, that's what it's come down to. It's the differential. So so you can see here the slow stochastic is starting to be overtaken by the fast, and that's that strength you see in our work right here. Let's see. Let's go to the 4-hour. Move that out of the way, and you can see it's slower. It's not as fast as my work, and in this case here, it's doing the same exact thing as. Oh, you can't see that. Let's see. In this case here, you can see it's doing the same thing. It's coming up to the 0 line, and and is piercing just the same way. The white is piercing the dashed line there. So it's a good tool. It's a very good tool to use. This has got, like I said, it has something like a 68 or 69% correlation to my math, which is not bad. You got to figure it's only 31% off, a third, which is pretty good because everything else is nothing even remotely close to my math. We used to do the webinars. We used to call it Algo Wars, watching other indicators against our indicator. Nothing could keep up with it. If you can find one that you think is the best, we'll put it up there and you can watch it compete against ours. And ours is so much better. So, but this is the closest you're going to get to it right here. The slow is the dashed line, the slow K, and the white is the fast K. And that'll keep you in the hunt, as I would say. That's what we used to call it on the floor. It keeps you in the hunt. All right, I hope that helped you out there. if you have any more questions, don't be afraid to ask. We're really happy to look at anything and everything around here. We're going to go back to the currencies now, and it's you know, it's where we are. We like doing that stuff. Let's see, how do I get that back on there? Like that. There we go. There we go. So now, where we left off. Oh yes, let's go back over to. We were looking at the euro. See that? Euro's already bouncing up. I really don't think that the marketplace is really that. No problem at all, Stefan. No problem. Always willing to explore a new idea. To me, I don't take anything anybody asks as a challenge. I look at it as a way of exploring with them, or you, or whoever. I like exploring. Now you can see here the cable's very firm here, holding on. It fell down in the beginning, and now it's backing off. Matter of fact, we should go take a look at the bonds. Maybe the Fed came in and bought bonds. More than likely they did. They have the power to do anything. Let's see if we can move this over a little bit. Can we see that over here? Can we move that over? That's at 1325, and that would put it. That line I think puts it past the 165. They're starting to sell this down again too. We are seeing the pressure on it. Let me see if I can. We'll put the 1 hour up there for you. You'll be able to see that. Oh, we could show you either, really. Where did the 1 hour go? All I have is the 4 hour. Did I delete one of them? Let's make a copy of that. File, copy window. File, paste. There we go. Let's just minimize that and make this the hourly again. And hourly. There we are. Let's bring that up on the screen again. There it is. You can see they're still putting the pressure on it. It's slowly drifting down. Nowhere near as much as the stock indice, the other like the S&P and so forth. They've got more pressure on them. You know, the S&P 500 is down like 32 points, and the Nasdaq is down over 200 points. So there's more pressure on the ancillaries, and that's where the interest rates have a big effect on the Nasdaq 100, or Dukascopy has it on their platform. It's called the Tech 100, and this is like the major index of the world as far as I'm concerned. You can see that right there. You see that's starting to break down again. Now this is the 4 hour. Let's go to the 1 hour. There we are. U.S. surges due to. See if the article will pop up on the screen here. I think it's going to pop up. We're going to get this on the screen. See what Dukascopy was putting out. But there's the hourly. You can see the pressure on that, and the line had broken there. And matter of fact, it broke even earlier on this than on my work, because there's the hourly there, and we've only been through just 2 hours of the minus. So, you know, it was a downwardly slope. In this case, the prices rose, and now these last two are doing okay. Here comes the Dukascopy quote. See what that's all about. It'll fill in. So we can see their interest rates. You know, I think the Fed is going to hold up the market as best as it can. I think that there are some funds out there that need to push some stuff out. Nothing major, and I just don't see it. Okay, here we go. U.S. dollar surges due to CPI fundamental analysis. Okay, and that's pretty much a short-lived adventure. It's already rallying. The currencies are all rallying against it again, as you can see on our charts there. There we go. And when we go like so, let's minimize that. There we are. And then you can see here the euro there. Well, there's the cable. Let's refresh the cable. But the cable's holding up very well. Just about unchanged for the day. And the euro is has moved up from the lows, and we'll see how they play that out. All right, let me go there from here. We are going to go to the Turkish lira. Let's see what they're doing to the Turkish lira. right there. There's dollar Turkish lira showing the strength. We had a volatility signal yesterday, so we're going to be able to put the buy signal right there in. Okay, there we are there. You can see we are through the weekly with no problem. And then we drift over to the euro Turkish lira right there. And that's been in a daily buy since like back here. In fact, I'm not sure what that's all about, but I guess what it is, I could put a red in there and wait to see when it finally catches up to it for the next sell. And you can see here we closed in a weekly buy last week on the euro Turkish lira pairs trade. So the strength is kicking out there too. We ourselves are thinking, we've been thinking for weeks now, we think it's going after this line in here. It's going to make new highs. So with it going, trying to play into the weekly buy, if it survives that weekly buy and a daily buy, they should rip that. They should rip through that, something like that. All right, now let's go over to the Canadian. Canadian's been doing a fine job on the downside. It's really been picking up some real buying, and as this goes down in value, that makes it more, or as it goes down, it makes it more valuable. Because what it is there's less Canadian dollars to the American dollar. So it's much more dear, it's much more valuable. You can see here that we've been in the sell since this area here, and this slide has really been going on nicely. You can see there's the weekly. So the pressure is on there. Normally this correlates with the oil. Oil should be higher, not lower. And same thing with, we look at the other pair trade, that is the loonie, which is the New Zealand against the Canadian dollar. You can see there, that's really drift down. So kind of says to us that oil is probably relatively flat. It did close in a weekly, not a weekly, a daily buy last night. Let's take a look at that. Right there. And so it's the Canadians pulling it more, so it's actually higher than being flat. And you can see we're in a weekly buy since here, since the low 62s, high 61, something like that. And you can see it got up to 66. We slid into a sell here. Next day jumped back into the buy. You can see it was another winner chicken dinner. That's what happens when we coordinate the daily with the daily right here, the daily quant right there, with the weekly quant right there. When they're both in the same direction, you can deal with the hard delta. When they're not, you can only trade the options if you want to trade the daily signals. In this case here, you can see it goes into the sell. It doesn't really go down too much, just maybe $1.50 change, something like that, and for a couple days. And then now you got the daily buy again, and that one says that you can be long this product right there on the hard delta. All right, or underlining hard delta, however you want to describe it. All right, now, we jump over to, from there what we do is we go back to the we go to the energy sector. That's what it is. We go to the energy sector right here. And so that's why we're looking at crude oil. And then, woo, look at that. They just took up the stock market a little bit there. Like I said, I don't think the Fed's going to let them beat it too hard. And then we take a look at natural gas. There's natural gas. It's been a daily buy for a few days here since there. And we're in a weekly buy since back here. There was an article out about the malware people front-running the market. So it wouldn't surprise me. The math looks like it says it's doing it. So you can see here, same situation. This is the gas oil that goes into the automobile. It closed in a daily buy last night. We've been in a weekly buy. In this case, this product has been in a weekly buy since the first week of December in the 140, 139 area, mainly the 140 area. And you can see it's now trading at the 214 area, 215 area. So there's an enormous move in the demand for that. Higher prices and so forth. Ooh, reedy. Let's see, now where do we go? From here, we jump back to the currencies unless someone has a question. And what we do is we go take a peek at the, where's it at? Right, we go to the ruble. Ruble went into a daily buy yesterday. There's the volatility signal. Was firm here, you can see that. But overall, it's still in the weekly sell from this area in here. So it's kind of drifting down. And now looking at the Japanese yen, You see Japanese yen is trying to turn up, and we're actually seeing positive action in the weekly also. Well, it is happy to hump day Wednesday, so we've got a little bit more work to do to see how it closes out the week. But you can see we're getting some indications that there is some firmness in there. Then we jump over to the Mexican peso against the dollar right there. That has been in a sell since way back here. And you can see it's just been drifting in the weekly, and you know, it goes up and down. And it was a nice day sell that carried it for a long while, and then it went into a buy for a day, and then right back into a sell, and a day later it went into a buy, and you know, it's been in the buy since then, and then it closed in the sell, daily sell here, which meant you could be short because we're in a weekly sell at the same time. You can see it broke down. So that's the Mexican peso. It's always interesting to see them because they're a neighbor like Canada, and there's a lot of commerce going on. And then we drift over to the South African rand. We look at that for the metals complex. And until someone says, hey, I want to see something, and then we stop what we're doing and we go do that. So I do this rhythm of all these products, and the moment someone says, hey, like Stefan did, he wanted to see the Dow Jones Industrial Average, we get involved in that. And when we finally finish that, if someone else asks a question, we'll do that. And then you know, and if someone else asks a question, we'll follow that. And if not, then we go back to doing this rhythm itself. So there is the South African rand. You can see it's been going down. We always interpret that as strength in the metals market. So what we do is we go over to gold-a-roo. See how Mr. and Mrs. Gold doing. You can see it's firmed up. Yesterday they had it down throughout the webinar, and it looked like it was trying to play with the daily sell. By the end of the day, they pushed it back nicely, and you can see here they're trying to go up after the 50 area again. You have a red and green dot in there. You can see that just hiding right behind it. If I widen that, maybe it'll help a little bit. Yeah, see that little red dot right there? Let's give it a refresh. Let's give it a refresh. There it is. And okay, it's wiped out the red dot now. So there's some strength in there. Then we go over to the silver market. See what the silver is doing. Right there, you can say, oh, look at that. Nice bounce back up. Now they were flirting with the sell, and it's just on the edge right there. Is that a minus? Plot 1 is a minus. It's still on the sell by the edge. Now let's take a look at it through Dukascopy at the same time. On a day chart. And then, let's see, where is it? Right there. There's silver. And we'll see how silver looks on there. Oh, there we go. Hey, Stefan. Oh, hey, LS. How you doing? How are you? I'm doing good today. You know, it's looking forward to it. Some great action. Nothing better than having some great action on, you know. Some binaries on the downside for the last couple of days. You know, life is good. All right. And let's see. Please look at the dollar. Oh, yeah. Yeah. We were just there. Let's go back to it again. Okay. Let's see. Where is it at? There it is, right there. So that's a dollar South African rand. See that there? It's it's a good trending product. It follows our math really nice. We did have some weird stuff go on here, where we were in a daily buy for this nice powerful move, and went into the weekly buy here. We had 3 solid days up of strength from it. Went into a sell here, and then it took a couple of weeks to get into a weekly sell, which was really interesting. And so you couldn't be long because we were in a daily sell, and so it just stayed in that daily sell all the way up in here. It went into a daily buy there. I guess it was right there. Gave it a daily buy, or was it there? That is a minus, so no, it was there. And you had a nice little pop for a couple of days. No big move, and then we went right back into a sell here, and we went into a weekly sell. So then it caught all this action here. And then it went into the daily buy, but you're not supposed to take anything. You went into the sell here. You can see the nice win-win chicken dinner there. And then a little choppiness in here. And it didn't get into a buy until right there. And then went into a sell and a buy again. And then we're in a weekly sell, so you can't take that. And you lost a little money here. And then again, as always, Doc's math comes back and makes whatever you lost back. You can see right there. Nice big win-win 3 chicken dinner. How's that, Stefan? Pretty good? Now, where was I headed from there? Oh, yes, the metals complex. So, let's go take a look at. We saw there's silver. Silver is fighting to get back up again. Made a nice low there today. And you can see gold, of course. Gold holding up very well. And then we go over and take a look at platinum. Right there. Platinum's trading at 48. And gold is trading at, let's see where gold is. Let's put it on Dukascopy. And gold is trading at 41. So it's trading at 591, basically, the spread. Hey, George, how you doing? If you have time, can you put silver back up? Oh, sure, I always have time for anybody that asks. Remember, that's how we all learn. We're all proactive. The days of reactive trading are gone. So I need people to throw ideas out there. Makes us all go look at things, You can see silver's trying to get into a sell, but we're in a weekly buy, so it's probably more profit-taking than anything else. Also, remember, the central banks don't like the metals going up. That's why we like the Bitcoin. Oh, I'm sorry about that. There we are. Oop, there we are again. Yeah, so you can see here, when it comes to silver, it's still flirting with that weakness there, which is kind of surprising, It doesn't seem to want to let go. And I'm a little, like I said, we keep on thinking that these metals are going to finally, become like the cryptos. I mean, that's really where they need to aspire to be at this point. They really do. They need to. The cryptos have taken over as the disaster product now. So. Yeah, and look at that. It doesn't seem to want to fill in. I'm not sure what that's all about. There we go. There's silver. And let's see, gold. Let's see what gold's doing. They're giving us quotes in gold, but they're not putting a chart up. For 2 days now, they haven't done that. I'm not sure what that's all about. So I'm not going to worry about that. But there it is right there. You can see silver just trying to break down. It just doesn't seem to have any... these metals, they're just not the cryptos. The cryptos have a value. People don't want to respect the value. And the value is the technology of them and the independence of them. And so the less government interference with them. It's one thing for a fund to interfere. And I'm going to explain this. The reason why it's okay for a fund to interfere is it's managing money. And for every buyer, there's a seller. So if a fund wants to become aggressive on something, that's their prerogative. But when a government bureaucrat, like the Federal Reserve or any of these other central banks, decide to get aggressive, it is tax money. It's money they've taken from us, and they're speculating with it. And I didn't give them permission to do it, so I don't want them to do it. I don't mind them keeping an orderly market, but I'd rather have a less intrusive central bank or Federal Reserve. And so when they're intrusive, they mess up price discovery. And what do cryptos do? Cryptos clean that up. In other words, if people are buying cryptos, they want to call it a pyramid. It's no more than a pyramid than anything else out there. It literally is not. It's no different than buying Apple, buying a crypto. None, except for Apple pays a dividend and manufactures a product. Cryptos manufacture independence and a technology with that independence, or vice versa, a technology that gives them independence from government entities or bureaucrats deciding what they think marketplaces should do. And so I've been a very pro-supportive person involved with the cryptos for years now. I believe in them. They're a tool. They belong in your portfolio anywhere from 1% to 5%, depending on how you manage your portfolio. And they have replaced gold and silver. And that is where I see it all. If anybody disagrees, I'm glad to hear it. But you know what my opinion is, and it's my opinion. And so it's not that you could be wrong and I'm right. It's just that's how I see it. That is the dynamic of it. It is a independent entity that has technology that blocks the central banks from interfering with them. Now, will they interfere with them over time? I believe so. How will they interfere with them? I believe they will make it harder to convert currencies in and out of them. But the technology stops the opportunity for the governments to do full damage to them. So in other words, okay, you might not be able, your country might say you can't buy cryptos, but you can buy cryptos. You'll take that money in cash and go buy cryptos somewhere, and there'll be no power over them to stop it. You know, and that is really the whole action of it all. It really is. And that is really, you know, that is important. And so that is how, you know, that's how it should be played too. That's exactly how it's played. Hello, hello. So that is the cryptos, in my opinion of it, and I think they are the heir apparent of interference of the metals market. In other words, they have now taken over where gold and silver should be. Gold should be between $5,000 and $10,000 an ounce. Silver probably should be, you know, well, same way, you know, 3 times higher. You know, it should be probably 75 to 100, bouncing between those areas. The government interferes with that, and there's nothing we can do about it. You know, these central banks, you know, have enormous power, and they're going to do what they want to do. But cryptos are saying, guess what? I don't like what you're doing, and we're going to go find a way of doing something else. And that's what they are, and it's fine with me. All right. Where do we go from here? Let's see. We were looking at, I think we were in the currency zone, right? Oh, yeah. We just got done the South African Rand. And so we looked at the metals market. So now what we do is we go over to Bitcoin, and we'll go over to Coinbase too, and look at both of them. Not there. Right there. And Bitcoin is not, you know, is nowhere near. It's been in a daily sell since this area here, and it's gone sideways. It's not the most liquid thing, and you can see it is flirting again with the weekly buy, so that's good right there. For some reason, it doesn't fill in. It just shows us each week where it is. That's where it went into the sell here. You can see the sloppiness we've had from it. And then what we do is we have, let's see, open it up. It is, where's it at? I guess it's, is it right there? I think it's right there. Let's check that out. And I think this has Coinbase in here. So let's go find that. Coinbase is another tool. I noticed that, nope, it's not in there. We'll have to put them in there, keep them in there. What is that? Okay, there we go. Let's just close that. And then we'll go here. Stock combos, that's where it is. Stock market selling down again. Yeah, see, I think the Fed comes in, perks it up a little bit. You know, all they're trying to do is make sure it doesn't fall too far. That's all they're doing. And there is Coinbase, and this is 63 tick. You can see the strength of it for the last couple of days. You know, we went into a sell for here for, this is a 693 tick bar, and the institutions, we can show you the institutions let it drift down to the syndicate bid. What a syndicate is it's the brokerage houses who created the IPO. For 30 days they have to support the open, which is 275, and so they had to start buying, and there must have been a lot of selling there. And then now that things are getting in a calamity way, you see the buyers have come back in, and we went into a daily buy here, and it ran up nicely there, about was that $30, $40 almost ran up to went up 30 some odd dollars, $38. What's that, 30? Let's see what we have here. Where's that? That is, yeah. So it went up $35 there from that move when it went into the buy. Oh, it did do a little correcting here and jump back into the buy again. Then you can see it went into the sell here, and right there it went into the sell. We had some downwardly pressure for $3 or $4, and then jumped back up again. And you can see where it's at right now. Yesterday, through all the calamity. Again, this is why I like the cryptos, because it is it's an opposition to the central banks, and so that's why we like that. And that's the action. You can see here, same situation. You can see right there that we have strength went into the buy here after the volatility signal right there, and we had buying again. It went up about $5-6, something like that. And you can see this morning, that's where it's at right now. Why they're selling it down a little bit, I'm a little surprised. Maybe interest rates, I don't know. Maybe the cryptos are going to start gravitating into the interest rate universe. So inflation. But I think instead, personally, I believe this product is an inflation fighter more than it is influenced by inflation. No, wait a minute. It's influenced by inflation, but it's not. To me, I think it goes up in value when inflation comes in. So in other words, I think it deals with inflation. I really think it does. I think the cryptos are a good tool for inflation, what the metals used to be before they didn't trade right. Now here's a daily. We still only have it was on the 14th of April, so we are not even one full month. When we start to see this thing start to fill in, that'll be nice. Matter of fact, what we might do is, let's do this, format indicator, and for the time being, we're going to remove that, and then what we're going to do is we're going to take this one, and we're going to turn that on to the stock and see if we start to get some type of indication of what's going on there. Okay, yeah, see, we're starting to get it. Alright, so let's move that down now. See, GAS 3 has one less input, and because of that, it calculates a little bit more faster. So it's showing on it, it's been in a daily buy right there, of course, it's showing us that. So now we're going to start to get some daily signals. So we've got a daily buy going on right there. Closed in the daily buy there, you can see the last 2 days have been fighting to stay up there. And so that's where we are with that product. And this is the crypto stock. They call it Coinbase. It's an exchange. It trades 3 or 4 major cryptos, and we think that, like I said, I think that the cryptos are going to be a good inflation fighter over time. All right, let's see, where else are we at? Take a look at Apple. Apple's down a little bit here again today. Let's see, let's give this a refresh. Closing the daily sell yesterday, and you can see here it's flirting with a buy. It's been in a daily sell for like 9-10 days. We've been in a sell on this product since here. Let's put a line in there. There it is right there. We've been in a daily sell right since there, but we're in a weekly buy. We went to the weekly buy right here. Let's fix that right there. There's Apple Computer, the biggest stock in the world. And we went into a daily buy right here. That was a nice winner chicken dinner. There we are. And then you can see here now we're doing some type. We've gone zigzagging in this thing, where it was in a sell from here, and went into the buy right here, back into a sell, and then back into the buy for this move here, and now that put it into a sell, and it has fallen from 33.58 to what's yesterday or today's low, 33.58. So it's almost $11 down since it went into the daily sell. Unfortunately, it was in a weekly buy, so there's not much to be played there unless you were trading the binaries or the options on that product. All right, what else we got going on here? Let's see. Shall we take a look? If Stefan's around, why don't we do this? Let's take a look and see what the 1 hourly chart looks like. I mean, it's only an hour. I mean, so it's not going to be moving around that much. Let's put that up there. There it is. So there it is right there. It's trying to climb up. You can see we're trying to get into a buy there. You can see, you know, the weekly, or that, what is this? Oh, this, no, that's Apple. I'm sorry. Let's put that back. Where's that at? I'm confused now. Ah, there it is. Okay. So let's close that. And then go find, there it is right there. There we are. And there's the hourly. Let's move that up. You can see it's went into the sell here, and it's back to where it's at this point and working its way back down. I don't know if they're going to go after that tail there or not, but one thing is for sure, there is pressure on this product. Which is, oh, that's, yeah, so this is the hourly Dow Jones Industrial Average. Probably go down and touch the red line again or something like that. You can see our work trying to roll over in here. So that is where we are at. Any other questions out there, traders? Wonder what we should call this webinar. We've talked about this, we've talked about a lot of these things around here, about the idea of how cryptos versus, say, gold. There's no doubt about it. Gold is is not doing the job it's supposed to do. So times have changed, and central banks have made a situation out of that where we can't trust it. There's cryptos. Indeed. And that's really where we're at too. We really believe that. Why can't we move that thing over? Alright, I'm just going to type it back in again. Crypto. There we go. Alright, traders, we're going to get out of here. Get ready for the wild and woolly action unless someone wants to see something. I don't see anybody jumping out and saying anything in particular. Alright, this is Doc from North America. Tomorrow will be Thursday, and we'll be heading towards the end of the week. So, happy trails to you until we meet again. Happy trails to you, to all our cyber trading friends. Doc here from North America saying arrivederci. Ta-ta for now.